So how do we do it? What actually goes into your climate-friendly portfolio here at Carbon Collective? Well, for our stocks, it all begins with carbon emissions. It's probably not surprising that some sectors of the stock market are far more polluting than others. If we look at the utility sector or the energy sector, we can see that for both, every $1 million invested has a significantly higher carbon footprint than the technology sector or healthcare. In fact, 4 out of the 11 sectors of the stock market have far higher carbon emissions than the rest. Utilities, energy, materials, and industrials alone are responsible for over 85% of the carbon pollution of all publicly traded companies. But they're only a small part of the overall stock market, less than 19%. So we simply don't invest in them, but invest in the rest, using low-fee sector-based index funds. This makes our stock portfolios broadly diversified, investing you in over 1,400 stocks and tracking over 80% of the stock market by market capitalization. By removing these high-carbon sectors, we completely remove all fossil fuel companies and pretty much any other company that is dependent upon fossil fuels for its core business. But even though the rest has a much lower carbon footprint, it still has some companies that are pretty bad from a climate perspective, so we make a few further adjustments. In consumer staples, we pull out the meat producers and cigarette companies. In financials, we pull out the big banks and Berkshire Hathaway because they are direct financial backers of fossil fuel companies. So that's the foundation, but what about the remaining 20%? In our portfolios at Carbon Collective, we replace the companies making climate change worse with those building solutions. Using the list of climate solutions composed by the team at Project Drawdown, we evaluated every publicly traded company, resulting in a final list of over 100 of them. That 20% of your stock portfolio gets invested in these companies. Every year, we'll update the list as new companies come onto the market and existing companies meet our inclusion thresholds. So that's how we build stock portfolios at Carbon Collective. 20% is invested directly in the companies building the solutions to climate change. 80% is in the companies who are already low carbon and are not invested in powering the world with fossil fuels. So that's stocks, but what about bonds? Bonds are a key part of any balanced long-term investment strategy, and we looked really hard for a corporate bond fund that didn't include bonds from fossil fuel companies. We couldn't find one. Even ESG bond funds, like this very popular one from BlackRock, still have fossil fuel bonds. Luckily, there's a great solution out there. Renewable energy is a great fit for bonds. It has a high upfront cost and then a long-term, very predictable payout. Companies and governments are issuing green bonds to raise debt to finance building renewable energy infrastructure like solar and wind. So instead of corporate bonds, our portfolios put your money to work in green bonds. Then for diversity, we invest you in a spread of US Treasury bond funds from short to long, including inflation protected. The final part, we keep 2% of all of our portfolios in cash, so you have plenty liquid for auto rebalancing. Let's bring it all together. Here's a breakdown of one of our most popular portfolios. This portfolio consists of 80% stocks, with 17.8% going to the companies building climate solutions, and 62.2% to the low-carbon sectors of the stock market. 7.2% of it is invested in green bonds, with 10.8% in a range of US Treasury bonds. The remaining 2% is held in cash. So that's how we build climate-friendly, well-diversified portfolios at Carbon Collective. If you want to learn more about how we can help decarbonize your savings at Carbon Collective, check out our other videos, or better yet, sign up today. It only takes about 5 minutes to get started.